Good morning, good afternoon, good evening. My name is Market Maker 69420, and in this episode, we're going to go over the market open Monday and how it affects the economy. As markets kicked off the week on March 2nd, 2026, geopolitical shockwaves from joint U.S.-Israeli strikes on Iran dominated the narrative, triggering a risk-off open across equities while fueling sharp rallies in energy and precious metals. Stocks gapped lower but staged a potential recovery amid dip buying. Commodities saw volatility from supply disruption fears, and cryptocurrencies demonstrated resilience by outperforming traditional risk assets despite initial dips. With economic data like ISM manufacturing PMI on tap, investors navigated heightened uncertainty, balancing safe haven flows with broader macro link. So how did this affect the stock market? When looking at index futures and pre-market gap, major indices opened sharply lower, gapping down approximately 1.5% across the board due to overnight escalation in Middle East tensions. S&P 500 futures tested key support around 6,800 before rebounding, while Nasdaq and Dow futures followed suit with initial declines of 1.6% and 1.2% respectively. By midday, the gaps were largely filled as buying pressure emerged. When looking at pre-market movers and volume, early trading saw elevated volume in defense and energy names, with Palantir Technology surging 6.5% on government contract tailwind, Northrop Grumman up 3.5%, and ExxonMobil gaining 1.9% amid oil rallies. Losers included Berkshire Hathaway down 3.56%, Tesla off 1.95%, and semiconductors like broadband declining 2.39%. Overall volume was above average, reflecting rotation out of cyclicals into defenses. When looking at economic calendar and news catalysts, today's docket featured the ISM manufacturing PMI at 9:45 a.m. ET, final February read, and construction spending at 10 a.m. Eastern, both critical for gauging industrial health amid rising fuel costs. Broader catalysts centered on the Iran conflict, with potential oil disruptions stroking inflation fears and delaying Fed rate cut bet. No major earnings, but geopolitical updates drove intraday swings. When looking at market breadth and internals, breadth started weak with decliners outpacing advancers 4-1 on the New York Stock Exchange, but improved to near even by midday as dip buyers stepped in. New highs outnumbered new lows, signaling underlying resilience in select pockets. Advanced decline lines for S&P 500 showed energy and health leading, with tech and financials lag. When looking at the volatility gauge, the VIX spiked to intraday highs around 25, up over 10% from Friday's close, reflecting heightened fears from the Middle East flare-up. It moderated slightly as stocks recovered, but remains elevated above 20, indicating persistent uncertainty and potential for further whipsaws. When looking at technical setup, S&P 500 defended the 6,800 support level for the fourth time this year, forming a potential double bottom pattern if it holds. Nasdaq found footing above its 50-day moving average, while Dow hovered near flat after pairing a 600-point drop. RSI readings suggest oversold conditions, with potential upside to 7,000 if geopolitical risk ease. When looking at sector leadership and macro links, energy led by 1.7% gain on oil surge, followed by healthcare up 1.8% as a defense play. Tech and financials drag down 2.2% and 2% respectively amid risk evasion. Macro ties to rising US dollar up 0.87% to 98.46, and treasury yields pressuring growth stock, while commodity links boosted resource-heavy sectors. When looking at positioning and sentiment shifted bearish, with fear and greed index dipping into fear territories, but institutional dip buying, JP Morgan recommending buys, limited downside. Positioning data shows crowded longs in tech unwinding, with rotation into energy and defense amid war risk. Moving on to commodities, when looking at gap from prior sentiment and initial momentum, oil gapped up 10% from Friday's close, settling around 79.7 a barrel amid Iran strike fallout, while gold jumped 3.1% up to 5,410 per ounce in safe haven buying. Copper opened flat but turned lower, down 1.79% to $5.90 per pound, bucking the energy-led momentum. When looking at key reports and inventory data, no major inventory releases today, but focus on potential Strait of Hormuz disruptions, which could slash global oil supply by 20%. Recent OPEC decisions to lift output by 206 in April added context, but war risk overshadowed fundamental. When looking at US dollar correlation, strengthened US dollar DXY plus 0.87%, pressured dollar-dominated commodities like copper minus 1.79%, but energy and gold decoupled positively due to risk-off flows. Inverse correlation held for metals, while oil ignored US dollar strength amid supply fears. When looking at technical indicators, oil's RSI flashed overbought above 70 on daily charts, signaling potential pullback after the spike, while gold's MACD showed bullish crossover. Copper broke below its 50-day moving average at $6, conferring bearish momentum with volatility volatility bands expanded. When we're looking at supply and demand and macro drivers, supply shocks from Iran, 3 to 4% of global oil output at risk, clashed with softening demand from economic slowdown fears, but macro drivers like Middle East tail risk dominated. Metals faced divergence, precious up on haven demand, base down on the industrial slowdown. When looking at commodity indices and benchmarks, CRB index rose 2.5% on energy strength, while Bloomberg Commodity Index gained 1.8%. Benchmarks like Brent crude oil hit $82 a barrel intraday, reflecting premiums for war risk. Looking at liquidity and volatility windows, liquidity thinned overnight in Asia, amplifying gaps, but US Open brought volatility spikes with oil VIX equivalents jumping 15%. Windows for high volatility centered around geopolitical headlines, with reducing depth in metals amid US dollar moves. Moving on to the cryptocurrencies market, when looking at overnight Asian sessions and gap, Bitcoin gapped down to 63K in thinned Asia liquidity amid Iran news, but rebounded 5% to 66,700 by US Open. Ethereum followed, dipping below 1,900 before stabilizing at 2,000, reflecting correlated risk-off but quick recovery. When looking at correlation and risk assets, crypto decoupled positively from equity, with Bitcoin up 3.8% while stocks dipped, showing haven-like behavior. High beta to gold up 2.16% and inverse to US dollar strength, highlighting macro ties but outperforming Nasdaq amid volatility. When looking at on-chain metrics, real-time snapshots, supply and profit at 11.1 million Bitcoin versus 8.9 million in losses, nearing convergence that historically signals bottom. Whale accumulation persists, with net flows to exchange negative, indicating hodling amid fears. Market cap held 2.1 trillion, down 1.93%. When looking at derivatives data, futures open interest dipped 2% to 93.78 billion, signaling modest de-risking. Liquidation hit 300 million, mostly longs, then 1.8 billion total, but volumes remained healthy. Options skew favored puts, with implied vol elevated at 60%. When looking at ETF flows and institutional signals, Bitcoin ETFs saw mixed flows, 506.6 million inflows led by IBIT, but 6.39 billion net outflows over 4 months. Institutional positioning via funds like Polymarket surged, with crypto viewed as core alt allocation amid geopolitical hedging. When looking at technical setup, Bitcoin in 60K to 70K accumulation band, with RSI rebounding from oversold. Ethereum testing 200-day moving average support, Sol breaking out plus 10% to $86. Alt/Bitcoin pairs showing momentum, hinting at rotation if Bitcoin stabilizes above 66K. When looking at news and sentiment, bearish sentiment, fear and greed at 12 dominated headlines on Iran war, but analysts like Zeberg forecast 110 to 120K Bitcoin on ETF inflows. On X, altcoin wipeouts contrasted with rebound calls, with overall vibe shifts from panic to optimistic buying. In summary, Monday's open encapsulated a risk-off response to escalating US-Iran conflicts, with stocks recovering from sharp gap via dip buying, commodities diverging sharply, oil and gold surging on supply fears, copper pressured, and crypto proving resilient with rebounds amid on-chain accumulation. Volatility remains high, with VIX elevated and US dollar firm, but sector rotation into energy, defense, and safe haven suggests defensive positioning. That's all I got for you guys today. Don't forget to like, comment, and subscribe if you enjoyed the content. And if you would like to support the channel, feel free to buy me a coffee on Patreon. Thanks. Bye-bye.